Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome, good morning. Good morning to everybody. Sorry guys in the Zoom if you couldn't hear me. I was just doing the getting ready for the YouTube. Welcome everybody in YouTube. Guys, it's my name is Ron at Stocksnipertrading. Dave is taking a day off today. He's going to take day off on Fridays going forward. So I will be coming in. We might be doing London sessions or we might be doing New York sessions on Fridays. So I'll let you guys know going forward because I am fasting. Happy Ramadan to everybody that is celebrating too. So like right now I'm fasting, so I already had my mahur. I already ate a little bit. So sometimes on Fridays, maybe London before, because I can't drink anything right now. So it's going to be hard to stream throughout the day because I also have like post New York sessions throughout the week and things like that. So I might only limit myself to how much I can stream. Like because before I was doing it like 6 hours, 8 hours with workshops and everything. So it's going to get difficult for me. But I'll let you guys know on YouTube. But I'll be filling in for Dave on Fridays. We might have like a London session, maybe a New York session, depending if there's news, like if major NFP, then we will obviously be doing New York. But if there's not much going on, then maybe we'll just stick with some Londons and things like that. But I play it day by day. That's how I do things. So welcome everybody to everybody that's here. Happy Friday and Juma Mubarak. And what we're going to do here, guys, is we're going to get started. First of all, let me just hit the record button for myself over here.
Recording in progress.
And what we're going to do is I do things just maybe a little bit different than Dave. I look at 4 charts, 2 side by side. So we'll look at first the indices. We'll look at US 30 and NASDAQ. We'll do a full top-down analysis on them. And then we'll look at some metals and energy. We'll look at gold and oil. Okay, I'm not going to have time to do any forex pairs today. I will do 4 charts and we'll go till just after 10 o'clock because after that then I do need to leave for the prayer at the mosque. So I hope everyone has a good session. Just please guys don't over leverage, as I tell everybody in Zoom. Same with you guys on YouTube. Let's learn how not to over leverage so we don't lose or blow up any accounts. Trade within your own risk with your own account. You might be trading with $100 and someone on this call might be trading an account with $1 million. But if we all aim for 1% risk, it's 1% according to your account. Okay, so let's all have some fun. Let's all learn. And please, guys, if you can hit the like, and if you're new to the channel, please subscribe. Okay. So before we even look at any charts, let's look at the news. Let's look at Forex Factory. Let's see if there's anything in particular that we need to look at for our session. So right now in Europe, you can see that the London session, there was a lot of red folder news. We had French flash manufacturing come out. It was red. We had French flash services. Then we had German news, and then we went into British red folders, flash manufacturing. So we had a lot of. That's why there was a lot of bearish momentum in the stock market in Europe, because there was a lot of red folders. But you can see it's kind of mixed reaction. You see some green, red, green, red, green, red. So it's not like all across the board, all red or green. So there's a little mix. Us, in what we're going to see is 8:30 a.m. If you're trading USD CAD or anything like that, we have Canadian news, core retail sales and retail sales month over month. We also have some USD news. These are orange folders, so they are of medium impact news. They are still critical news. We have core durable goods in the US, 2 folders coming out at 8:30. Then when we get into Wall Street opens up at 9:30 a.m. and then 15 minutes later we have 2 red folders, these USD flash manufacturing PMI and flash services PMI. So we already just went through an FOMC with Powell, and April, the first Friday of April coming up, we're going to have an NFP coming up. So you can see how the markets have been pretty volatile as of late. If you have been trading, gold is approaching 2,000, breaking 2,000. Are we going to get higher next week? Is it going to retrace a little bit? These are all questions that we're going to find over the weekend, because a lot of news develops over the weekend. When we had last week the Credit Suisse news, it happened on late Friday in the after hours, and they came up with a deal Sunday morning, and then once they released all that information, it was Monday morning. So you can see maybe we might have more news of some banks getting liquidated out of the markets and things like that. So we don't know what's to come, but there's going to be a lot of things. If you're excited to trade for the next couple months and years going ahead, there might be opportunities that you've never dreamed of coming up in the market. So that's the beauty of learning how to trade. There's always going to be opportunities in the markets. Okay, so let's get started. We're going to look first at US 30, the Dow. Okay. Okay, so we're going to start off with a top-down analysis. I know right now it's like a little, it's bullish right now. It's got a nice leg coming up right now. If you guys are already in trades or looking to take trades, I'm going to take some trades right after I finish the top-down on 4 charts. But if you guys are looking at anything, just be careful. And over here, London started at 4 a.m. Eastern, was London market open. And just a heads up, in the UK, they will be changing their times this weekend, daylight savings times. They were 2 weeks behind us in North America. So London will go back to opening up at 3 a.m. Eastern. Right now, it's 1 hour behind us. So that's why I opened up at 4 a.m. here. And this is where we got this push down, a pullback. Again, look at the pullback, 50% of this big red candle at 4 o'clock. And we continue to push for lower lows, a pullback right back into here, a couple rejections, and then we broke the support level, and we continued to push all the way down until about 6 a.m. and we're kind of finding a bottom right now. But these could be, again, pullbacks coming up, and maybe we're going to continue to come back down and we break this level down here and it might push down. But that's how it looks on the 5 minutes from like London. If I wanted to do quick trading, I could definitely work with what is here, but I don't know anything else. Like if I haven't been trading, I don't know anything on the daily, on the weekly, how things are looking. I just have a little small glimpse in there. But right here, we can see that on the daily, this is when the banks announced everything. So the markets were kind of very consolidated. They were very red, green, red, green, red, green. So there was accumulation going on, and there still is accumulating. So it kind of just broke out of here. And then we came right back down on Wednesday with a bearish candle coming down. with FOMC, and then we continue to push down, and now we're right back in here. So if I was to box this entire daily area in here, we're right back in the consolidation, right on the Friday, going into also almost the close of March. So we have one more week, and then we're going to close March candle. So we'll see where we go in the market. We might continue to break down, and then we have a lot of wicks to fill, and once we break those wicks, we might get a drop in the market. Maybe find some support again here, and we curl right back up. But right now, we have a bearish candle, and we're coming off of a big bearish engulfing candle up here. This candle yesterday, okay, it opened, we had a high up here, then we pushed down, and then we kind of closed right here. So it's kind of like with an indecision in the middle, and then we continue to push down. So let's locate our highs and lows of the day. That's normally what I do for all the securities I trade, and I'm going to use a purple color up here. Just one second, I just gotta move some the zoom control and everything like that. Okay, so I'm going to use a purple line to identify the high of the day. I'm also going to do the same for what I call is the anchor low. It's the low of the day. That's where our anchor is, where it came down, but we bounce right now. That's why you see a little bit of green candles coming off. The bottom could be representing this daily wick right now. If we continue to come down with this red volume and then we break this purple line, we have a new low of the day. Where could it probably go to? So why don't we look at some of these wicks in the market down here? So maybe we'll come down to this wick right here. I'm going to change the color now to yellow. So I only keep purple lines on my chart to represent the high and low of the day. Other yellow lines will look for other critical daily levels. And then next one will be like right here. If we lose this low down in here, we have nothing, like we have a black chart. So we have to start to look to the left in the past. What happened when we broke this yellow line? So if we continue to come down today going into Monday, maybe our next break will come down to this body and these bodies. And so what we'll do is we'll place another yellow line right here. And then if we cannot hold 31,150, we might continue to push down. Let's find our next area. Maybe it comes down to 30,875 right in here. Why did I choose this area? Because I have this red candle that came down, caught a wick right here and went right back up. I also have a couple days here where it came down right to that yellow line and went right back up. This red candle kind of came to the yellow line and closed right near it. And then you can start to see when we were coming up near that yellow line, we got rejected when we were below it. So that's a good area. And then I can continue to do this going forward, looking for other critical areas on the daily. And if we continue, maybe right here, here's bodies. I have bodies right here as well. And then I can continue to do this going down. And then eventually I'm going to stop. Okay, I'm not gonna continue to do this all the way down and down and down because right now the volume is right here and we have to break the purple, we got to break a yellow, another yellow. But right here where our most recent where it came down and went right back up, what I also like to do there is place like a green box here at those just to let me know that there is some daily support there. Every time when we came down here, it went right back up. It came down here, went right back up. What happens today if it comes all the way back down here and then we get near this green box? Maybe it's going to catch a wick and go right back up. So we've got to identify this area here. And also now for upside, what happens in New York if we start to get bullish on the stock market? Maybe there is a rally coming back up, but we have this big red volume coming from London. So if we have a pullback, where could we go up to? So what I like to look at is like maybe yesterday's low, which will maybe act as some resistance going forward today at 31,800. Maybe we come back up to this yellow line and then we get push down again. If we can break above that yellow line, where could we continue to move to? Maybe we might push up to this body and this wick right over here. So I place like another yellow line right here and the body and a wick, and maybe we fill from this yellow line to this yellow line, and then we're up to here maybe now, and then all we have left is just this red body above us. And if we can get up there, then maybe we might have momentum to break to our high of the day and engulf this candle body, and then maybe we're starting to break out. Maybe next week, maybe if it's a bullish move, if we get a nice recovery today off the bottom, then maybe if we start to break above here, I start to locate all of these wicks up here. Here was a wick, there was a body, wick, like a supply area on the daily, just like I did for the demand area at the bottom. So now I've kind of identified where daily supply is in the market, where there is some demand in the market, and then we just judge how we move on these candles. Okay, so that's daily analysis. We're obviously going to scalp the markets on a lower time frame. So let's start to break down this daily candle now into hourly candle. So 60 minutes. Now we can start to see a little bit clearer picture. So here was FOMC, 2 p.m. came up, and then they pinned it, and then going into power hour, it was a real bearish push down, and then going into the Asian session, kind of a pullback right up to that supply area, and then it pushed right back down for London, and then we came back up yesterday in the New York session, 9-10 a.m. Wall Street, and came right back up here, and then end of the day, afternoon, we had the push 2 p.m. Come all the way back down. Power hour kind of brought it right back up, kind of consolidated in the Asian session. We came back up in London, pre-London, and in London is this big 4 a.m. red candle. 5 a.m. a retest at that daily, continue push down, and here's 6 a.m. and 7 a.m. So we can see that it is making lower lows, a lower high, a new lower low. Maybe there's going to be a pullback to a lower high, and maybe it's going to continue pushing down. So this is now our hourly look in the market, and what I like to look at is 50% of this hourly candle, and it's also got that wick right there. So I place a white line now, a white line. And this white line represents an hourly resistance in between these daily zones, the yellow and the yellow. It's more for low, when I go to the 5 minutes. Maybe the 5-minute candles can break a daily, but then they get resisted at the hourly. They don't have enough momentum to get up to the next daily. So I like to know where there is some hourly resistance in the market. Also, I like to know where there is some maybe hourly support in the market. I can see down below us, right here, this area here, it used to, if you look at the bodies right there, the volume stayed below. This body closed above and then started to push up. When we came down here, it came down right to that white line and went right back up here. It kind of broke but got held at the daily, and we're right back up. And we're cutting kind of 50% of this green candle. So maybe if we lose our low of the day today, hourly momentum may push down to the white line, then ultimately at the daily, and then here's that big demand area that we located on the daily. When the hourly volume came down here, it went right back up. Came down again, went right back up. So maybe we come back down, maybe we're going to bounce off of there. Okay, so currently we are in a trend coming down. Even if you were to draw a trend line from like this wick from FOMC, connecting it down here and here, you can see it's all lower lows continuing to push down. Okay, so let's go into the 5 minutes now, and let's take a look at how these 5-minute candles are moving. So this is going into London, and then London pushed it all the way down, pull back again. 50% like of this candle is like right around there, and you see where it came up and then continues to go push right back down. Then we came up on the 5 minutes, see the yellow line now, so daily, and continuing to push down. And now we're kind of trading in between this daily and the low of the day. Okay, so currently like on this 5-minute trend, we are pushing. Like if I draw a trend line from here, you can see it's kind of descending. But we are building a little bit off the bottom. Okay, so let's find where our kind of 5-minute support area is, right at this daily. So I like to do a green box just for visual, to see that it is a green box here. We came, but as it came right back up, it's coming right back down. So we may break this at some point. Well, let's find where we have some like 5-minute resistance in the market right there too. So if we can break bullish, we need to break this trend line and maybe get up here and close above this area so that we can build here and maybe have enough momentum to break this daily area and maybe get up to that next hourly. Okay, so what we're looking for is a move maybe above here, or the daily, depending on how much room you want to give it to consolidate. We can consolidate this whole zone. So what I'll do for now is I'm going to consolidate this entire zone, and because I'm going to be doing some top down on some other charts, and then we'll revisit this. So if we can get like a move, maybe closing above 31,800, then maybe we're going to continue to push up in New York. I can also locate where there is some supply. There it got rejected, there it got rejected. Now the supply is being lowered just a little bit, so they are lowering the offers in the market. Like you can see, this last pullback didn't reach this red box. It's kind of lower where I placed that red line, so that's why some scalpers like to get in above here, but what we'll look for is something above here. What could also happen is it could come up and get maybe a false breakout, like an impulse candle, then it gets rejected, then it comes back down in here, and then we short the market. We'll short it up there. We won't take that buy up there, okay? The buy is only if like volume closes above and we kind of retest and we stay above here, and then we can continue to push up. Okay, so what we'll do is we'll look for buys above here. Guys, I'm Ron. Dave is taking a day off. If you're unfamiliar with who's doing this, Dave is going to take days off on Fridays now. Okay, if you join the team and give us 24 hours to respond or to reply, if you can send us another email at Stocksnipertrading, we'll get back to you. We'll get back to you. Okay, it's kind of busy over here, but we will get back to you. Okay, and if we continue to break down for some lows, we need volume to close below here. We don't want to just have like a false candle that just breaks and then you sell it on impulse and then it catches a wick and then it goes right back in here and then it's shooting up here. Okay, so you want to look for same thing, what I just said above. We want to see if a red candle can push below here, create a new low, close below here, and then we look for maybe a retest getting rejected here, and then we can use this as a resistance going forward. Maybe it might take a couple times to get rejected there, then we might break down to the hourly and then come down to the daily. I know some of you guys use the RSI indicator, so it is showing a little bit of divergence. Okay, you can see how it's kind of like equal lows down here, but the strength is kind of picking up a little bit. So there is showing some divergence, but that's not the end game, meaning we all have to jump in buys just because we locate some divergence, because it could be a false signal as well. But we'll come back to this. I'll revisit this. So I will leave it. Excuse me, guys. I will leave it over here to the left. We'll look at US 30 over here, and I'm going to do now a top down on NASDAQ. Okay, I'm going to go a little bit faster because it's 7:53, and I want to have all four of these charts ready for 8:30 a.m. Okay, so this is NASDAQ. Started here too, like in London, where we were pushing down, pull back, lower high, new lower low, pull back, lower highs, new lower lows, and now it's kind of playing around in this area, just like US 30 is. Okay, so they trade very similar. Some days they're completely different because maybe tech is moving as opposed to US 30. Okay, so let's look at the daily, how NASDAQ has been moving. It's been on an uptrend, coming up, higher highs, higher lows. Then this week, Tuesday, we had a green candle. Wednesday we had red, Thursday we had green, Friday we're coming down. So you can see it's barcoding, very equal bodies. Look at the green, red candles. I would, like, if I was trading, I would have trapped that in there if I was a daily trader and then wait for a better move, because right now it's accumulating, probably getting ready for next week. So again, let's find our high of the day. We can visually see the high wick. Again, let's go purple up here. Okay, and let's figure out our low. Our low, we are currently at our low of the day. Okay, it is right at the low of the day. So if we break it, where's the next logical area we can go down to? Possibly where all these bodies are, 12,530, or like right here. Maybe it comes down here. So I place a yellow line. 540, sorry. And then if it continues to push, if we can't hold this yellow line, it might continue to break down. Maybe we come down. Let's look to the left of the chart a little bit now. Okay, so you see this body right here, this candle got rejected at this yellow line, and then we use this yellow line as support going forward. And then if we can't hold there, there's the next area, 12,300 right here. This is the neckline. This is where previously we came up to here and we got rejected, and look at where the volume closed below the yellow line. Again, we came back up and got rejected and pushed back below there. What I like to do is where the neckline was, this used to be a area of resistance supply in the past. Maybe if I bring it across now and I make it green on the daily, maybe if we do come down there, that's where it's going to find some support and find some buyers, and maybe it's going to continue with this uptrend, maybe come down here, find some buyers, and then continue to push right back up. Okay, so that's to the downside. But what happens if we continue to maybe catch a wick? We form that bottom with that bullish divergence on the lower time frame, and we're coming up today. Before we can get it back up to the high of the day, look at right here where all of the bodies are, this area. So let's put a yellow line like right inside here, and maybe if we come up to here, we're going to see how we react at 12,725. If we can break there, we have a high probability it's going to break to the high of the day. And then if we break out of here, then where could we go? We have this impulse break over here to 12,800. And then if we continue to move, maybe we come up to these levels, 12,900 up here. And then again, what do we have is this big high up here. When did that happen? That happened on Wednesday, FOMC high. And then if we break above there, again, you got to look to the left of the chart. Start dissecting this area. Last time the NASDAQ was up here was August of 2022. Okay, so it's been a while since we've revisited this area, and right there is about 13,000 coming up there. Okay, I don't need to continue to go higher because the volume is currently right here. So just depends how much you want to do your top-down analysis. So what I do now is go back into the 1 hour. Let's break it down. Okay, so here was FOMC, the big push right out of the gate early. It came down. Then Powell started speaking at 2:30, and it changed up the mood, and then power hour continued to push down. Since then, we came all the way right back up into this area, and then it came back down yesterday. But it's not breaking any new lower lows below this yellow line. It is some higher lows. We came right back up into London today, and then they are pushing it down. So right now there is like a 3-bar play, bearish bar, and continue to maybe push down. If we break down, then there's our hourly support, those 2 wicks right there. So again, white line. If we can't hold there, high probability coming down to the yellow line, and then you see the big gap in the market here. Then we have to come to the left, and then we need to start looking at where we could possibly move if we break that yellow line. And then here's hourly resistance. Here it turned into support right here again. Maybe we break this yellow, come down to the white. If it can't hold there, then the next yellow line. Okay, and right now it looks like maybe a head and shoulder pattern where it got pushed down. I know it's kind of extended, but that's news. That's FOMC. But generally, if I don't look at those wicks up there, here's where all the volume was concentrated, left shoulder. Here's the head that broke out, and here's the right shoulder, right again in the same range here, and now it's pushing down. Okay, so that's the hourly. Let's go to the 5 minutes. Yeah, if you guys are trading, there's a new hourly candle in approximately 1 minute. It's going to be 8 a.m. Eastern. So if you guys are in any trades, just careful. There's going to be some volatility on the new 1 hour. Okay, so let's look now on the 5 minutes. Like right up here, we have resistance, resistance, resistance. Maybe in the future, this is going to turn to supply. So let's locate it with a big red box. We see the 5 minute candles coming up here, going back down, coming up, going back down, coming up, going back down. So this is a clear area of resistance in the market. If we can close above and cause maybe an imbalance in the market, and then they start shifting the volume and trapping some of those sellers, then maybe we're going to push up to that next daily up to there. Scalpers who are looking for 10, 15, 20 pips, like myself, I look for zones in the market. There's the next kind of zone. So if it fills from here to the red line, I get my ruler to measure the move. So I know exactly that that's approximately 30 pips. And then the next range is probably another 30, and then it's probably up to 60 up to that daily. If we can break below this low of the day, where could we go down to? Maybe a red line right here where it did break down. These are 5-minute candles that did break down, but you see where the bodies are, and then where it got held at that hourly white line. If it breaks below there, we look again to the left of the chart. Look at how choppy and messy it got in here. This was the Asian session, coming off of that big FOMC drop. So there is some support right in there. So if I'm a scalper, now I got all of my ranges to see where it could go down to. Okay, so here's the new candle. New hourly candle is opening up green. Why? Because here it had a nice big bullish candle. Those wicks couldn't make it down there. We came down but got rejected down there currently. So let's again just go through the motions. Let's bring a green box across. And if we can kind of hold, maybe we're going to build, and maybe there could just be a false break coming down to this red line and going back up. So for any kind of sells, I want to maybe look below, for a short position below this red line, okay? Because otherwise, maybe it might just come down here, pick up liquidity, false breakout, and catch a wick and go right back up. Then maybe we can continue buying. Only if it closes like below that red line will I look for potential sells in the market, okay? I don't want to just catch a red candle like right now. It could come down like right there, we all sell, and then all of a sudden it comes down, it taps this red line, then it goes up, then maybe it closes like right here in here, and then all of a sudden it's an extended W and coming up like this. So I'd like to just get more confirmation that it can close below here, maybe retest, then push down, then go into a sell. Okay, so that's NASDAQ right now. We'll revisit all of these. Okay, so again with US 30, like how I have the red line with NASDAQ, I can see like a red line inside here. Okay, so let's see how I would do this with a red line similar to NASDAQ, like right around, if it breaks to 6, let's see, right here, maybe a possible break to there, where you don't want to get caught kind of, see that red line? Yeah, see how it's breaking right now? Okay, so it could be like a quick fill, but let's watch how it reacts at this red line. Let's watch how it reacts here to see if it will go right back up. If you are trading, guys, I will give you guys these charts in the Zoom. Give me 1 second. Okay, everyone in the Zoom chat, you have a link there from TradingView. You can have those charts if you like. I'm going to now just finish off because we've got about 30 minutes and I just want to finish off gold and oil for everybody, okay? So let's finish off gold and oil. And these are static areas, guys. You can use these levels throughout the day with your trading. It's not just for like Wall Street open. You can use these if you're trading all afternoon, going into later to this afternoon. If you're going into power hour, I'm sure that those 5-minute volume will trade around those key daily areas and have reactions there. Okay, so let's take a look at gold. I know a lot of you guys love trading gold and it's been pretty exciting the last couple weeks, but gold, the reason why it's exciting is because the market had a lot of indecision with all the financial banks collapsing. So it's a good area to park money when there's a lot of indecision. If banks are collapsing, you know, you can't go hard with gold. Gold has always been a safe haven since before I was even born. So why would it not be a safe haven today? So you can see right now we're at 2,000. Okay, it's almost there. We might push and get out of 2,000 today. So our all-time highs are 2,070. If you guys remember, just a couple years ago we got there. So gold looks good. Like, it's very strong. It had a lot of support built at 1810 down here. A lot of support, like a double bottom, and then we just started breaking out real nice and bullish. The pullbacks are real nice and healthy. They're nice little pullbacks in the market, but they're met with nice demand and continuing to push up. So let's just go through the motions again. Let's find out today's high of gold and today's low of gold. Okay, so our high, 2000 today, exactly, probably right on the dot, 2000. Okay, nice whole psychological level. And then our low of the day today is about 1980, 1981. So there's a $20 range, which is 200 pip range on gold. And look at the retracement. Today we came roughly 50% of the body. From the body to the body, there's about half of it. Exactly half of it, 1980. Came down, beautiful retracement, caught a wick, and continued to push up. Now, let's locate the transition from yesterday's close and today's open, because this might play a factor in today's trading. Right there, what is it? 1993. So let's place a yellow line here just in case we come back down to 1993, because if we can't hold here, then it's possibly going to come back down to these bodies to 1988. So 93 to 88, $5 move, that's about 50 pips. That's beautiful for a scalper to just fill this yellow to this yellow. If it cannot hold here at 1988, then we might push down to this wick of this candle. Again, guys, I'm not a swing trader. Like, I wouldn't, if I was swinging, I wouldn't be looking this clean like this. I would be looking for bigger moves, but this is for scalping, because then if we can break from here, 1988 to 85, that's a $3 move, 30 pips. And then if it continues push down, we come down to the low of the day, and if it can't hold, then we're possibly going to come down to 1978. So you can see they're like 30, 40 pip moves, perfect for a scalper to get in and get some pips. Okay, but now what happens if we keep moving bullish? This is another thing. We came down there, maybe we picked up the liquidity, we came up to 2000, we're getting rejected at 2000. What happens if we come right back up to 2000 and we break out? We're going to look at 2003 right here. And then if it continues to go that high, this was our weekly high Monday. We hit this 2009 and or 2010 right up there. Okay, and then above what is above us here? When was the last time we broke 2010? It's right over here. This is that 2-day move back in March where it came for that high 2070, and then we got rejected. But we had another breakout over here. If you guys remember, back in August of 2020, this is when we broke out of there. It came up to 2015 right up there, and then it continued to push up to 2027. So you get more information coming back looking at gold at August of 2020 than you would over here in March of 2022, because 2022 was just a big green day, and then it was followed by a red day that just pushed right back down. Okay, so if we are locating all of that, we have levels above us where we could possibly continue to push on gold. Let's look at RSI on the daily. Okay, it was kind of overbought, but we had that pullback, and now it came back up. So if it continues to push up, we might have new higher highs, and maybe if the strength is decreasing, then maybe next week gold might cool off, but that's not always the case. What happens if something happens over the weekend and more news, more banks are collapsing, and or just anything that happens in the market, then gold is still gonna be bullish. So we can't always assume that it's going to come down. Okay, so let's look at the hourly now. This was gold's move on the hourly. It was kind of opposite from the stock market. You can see gold had nice support, making higher highs, a higher low, higher high, coming back down, which is a higher low from over here. So we are currently building nice support off the bottom, but now we're starting to find some resistance in the market on the hourly. Here we got rejected, right over here. We got rejected right there. So what happens if we come back up to 2000 today? Maybe we're going to get rejected in this area. So what I like to do is a red box here to show if these 5-minute candles are coming up here, we have to respect this higher time frame area. as resistance, because every time we get up there, we're getting rejected. Okay, unless we can close above this red box, flip the box to green, maybe use to catch some bids in here, and then maybe we will be continuing to move up bullish. So hourly candles are trading nice. We had this big bullish candle coming in at London, right after London, 5 a.m. pushed up there. Now we're kind of consolidating in here. So let's take a look at the 5 minutes. So here's the 5 minutes, maybe performing that. Here was that double top, came up and down, pushed all the way down. Okay, and then we found support. We came right back up into here. So maybe if gold can close below this daily area, below this yellow line, maybe it might continue to push down to the next daily down in here. But it needs to break this level right there on the 5 minutes. Okay, and it could be consolidating right now inside this area from the red to the daily area. So what I do is I put like a neutral box inside here, and I watch what's happening. I can even put like a trend line that started right here. Let's see if this trend line can hold going into here. And if we can kind of break out of here and we break out bullish and we close above here, then maybe we can continue to look for buys on gold this afternoon. Maybe gold will be bullish today, and maybe we get to 2003. Maybe we get to the next daily, which is 2010 up there. Okay, so that's how I would be looking at gold right now. We're right back down to like almost the 50 on our side, which is a neutral area. It's very neutral there. Bulls are not in control, bears are not in control. No one is in control there. Strength is neutral, so this could go any direction. But we'll see who builds more, who builds the momentum. Okay. So we have gold. I'm going to leave it right over here to the left, and I'm going to finish the last chart with oil. Okay, I know a lot of you guys like to trade oil as well. So oil has had a nice move, got up right back up to 70s. Okay, so it had a nice push the last week with everything that's going on in the markets. We found some demand, but since then, London, lower lows, lower highs, lower lows, lower highs, and then the big drop, and now we're kind of finding a little base. So what we're going to do is really quick, let's go to the daily. Guys, thanks for joining everybody on YouTube. Almost 500 viewers. That's awesome. Thank you for everyone that's joining in Zoom. Thanks guys for joining. Dave is taking a day off on Fridays, okay, so I will be filling in. I'll let you guys know for Fridays going forward. If it's an NFP Friday, 100% we'll be doing the NFP for New York, but sometimes maybe we're going to do a London session together. If you guys aren't aware, I am fasting for the Ramadan, so I can't drink anything when we're doing the New York sessions, like today, right now. So London is better for me. You know, I can get up, at least I can drink, I can eat before I start the fasting and things like that, but we just play it day by day here. Okay, so let's take a look at oil over here. And someone was asking me the other day, Ron, how do you do it? Like, how do you fast and everything? It's just mindset, guys. I know most of you guys fast as well, but it's just mindset. You know, once you set your mindset, like I don't even think of food. I don't think of drinking. Yesterday I was making my kids food all day while I was fasting. Like, you can smell it. You know, I took them to Tim Hortons. My daughter wanted donuts, so I'm fasting. We walked into Tim Hortons. It smells like coffee and donuts in there. You know, and it doesn't faze me. I'm not thinking about it. So you know, fasting, if you're not Muslim and you just want to try and fast for one day, just try it. Just see how well you can teach your mindset, because you can use it towards your trading as well. You know, if you want to learn patience and discipline as a trader, if that's what you're lacking, maybe you need to learn how to control your mind. You know, there's a lot of things that you can learn by fasting. Or if you're doing intermittent fasting for like if you're bodybuilding, or if you're competing, or if you're dieting, it really teaches you a lot about your body as well. You know, I used to compete, so I've done a lot of competitions where I had to be on a 1600 calorie diet, a real clean diet, 16-week preps. So I'm no stranger to dieting and fasting and things like that. So it's just setting your mind. That's all it is, guys. Once you set your mind, you know, I could be with you guys all day today in the kitchen making you guys food, and it wouldn't even faze me to eat or to drink or anything like that. You guys could eat in front of me and it just wouldn't even bother me. I was getting this question asked the other day with my friends, and they're like, Ron, how do you do this? I'm like, it's just basic nature. Even when the days get longer in the summer, it's harder, but just don't think about it. Keep yourself preoccupied, keep yourself busy, keep yourself doing other things. And then when you do that, then your mind is not focused on food or drinks or anything like that. Okay, so let's look at oil. Our high of the day is $70.25. Our low of the day is $66.75. So when you're trading oil or gold, keep an eye on these quarterly increments. What I mean by that is $66, 66 and a quarter, 66.50, 66.75, $67, 77 and a quarter, and just quarter increment moves. You're going to start to see that this is how these commodities move with these quarter increments. And then here, so what happened was we got rejected 2 times on oil up here at $71.60. So we know now kind of where there is our daily supply in the market right there, that big bearish candle coming into those 2 wicks. So if I was to draw like a big red box above here on the daily, I know that if we eventually get up here again near $71.50, see that quarter increment, that's where we got rejected at all those levels. So we came up today, but we couldn't make it up there, $70.30 or 25 cents, and we got rejected. So it is a lower high. We broke the bodies right here, and we continued to push down where we're near our low of the day. So if we kind of continue to break bearish with oil today, we could possibly come down to maybe this body right here, $66.18, and then maybe down to this wick, $65.25. Those are those quarter increments I'm talking about. And if you're off by 3 cents or 5 cents, it's still you got it right in that right area. Like right here, 64.40 is the next drop. And then below here, 64.40, I have nothing. So what we got to do is go to the left of the chart, and then you can see this yellow line, and then whatever is below the yellow line, same thing. We got to go through. There's 2 bodies, $63.57. That's maybe a new daily area we might come down to, and then we can continue to see down to this wick, $62.60, like right there, and then a big green box here, because that last push down, we came down there. That's where oil kind of picked up that big bullish candle. And then also that wick was a little higher. That's what started this big bullish uptrend on, so around $61. Draw that green box, bring it across if you have. You can even see to the left. If I extend it to the left, see where it picked up those wicks right in there. Okay, so here, now it's a higher low, so extend it across maybe next week or next month. If oil ever comes back down to $62, that could be a great long buy. But right now it came back down, higher low, $66, continue to push up. That's what started this huge uptrend right now that we got on oil. So we don't even need to worry about those until we come back down, which we are coming down to now. Oil came down, back up, got rejected, coming back down. This is like an M pattern, the neckline right here. What happens if it forms a wick and we come right back up? So now if we start to form bullish momentum down here, where could we come up to? Okay, so we're already getting a nice little wick. We're getting a push up. Maybe we're going to approach this yellow line, which was right here. And if it continues to push up, maybe up to $69.40 here, that used to be support in the market below these bodies. Here it was, got rejected and rejected, so it was resistance here, turned to support. Maybe we come up to here, and then we might have enough momentum again to get to that daily high. If we break out, you got to really watch this area, because every time we broke out of there, here it broke out, got rejected. Here it broke out, got rejected. Maybe again if we break out of here, maybe it might be a higher high, but we're going to impulse break to $72.50 to this wick right here, and then we judge what happens up there. Okay, so oil today is currently bearish, but we're building a little bit of a bottom currently right now. This is how it looks on the hourly. Okay, so we came up to that supply, rejected. Came up again to that supply, got rejected. We came up again pre-London and London, lower high. They pushed it right back down. And now you're seeing we're getting these hourly choppy candles like spin tops coming down, this little doji on the hourly. But what we can do is we can also find some hourly information here. If I come up here, I can find where my hourly high is, white line. I can, if I really want to get really like precise on this hourly candle that just opened up, this doji candle, this is where we're trading right now. So let's go to the 5 minutes and start to see how this is trading. So see the two white lines, that's that real tight hourly area. What I see, it's too tight. So what I'll do is I'll get rid of this white line, keep it consolidated. See over here where we're getting rejected at the hourly. So this is why I like to keep it real nice and visual with like a red box up here to show us that that could be ongoing supply going forward. But if we can break and close above this area, maybe we're going to turn this into an hourly support, and then we might have momentum to tap that daily, maybe go up a little higher. If we do, our next daily is up there. But for scalpers, maybe we're looking for just a move like up to here. Here's where, like pivots, where it came down, it went right back up, it came down, see how it played around here, then went back down. So then I measure the each level. So if I'm taking this trade to the yellow, I know it's about 50 pips, 47. If it can break to the next, to the red line, it's about 90 pips, okay, just like TP1, TP2. If I'm scalping just from the yellow to the red, I measure the move, 68.20 to 68.60, 40 pips. And you know exactly what you're looking for. And then you can see at the daily low, we're holding good support. It tried right there, it got a wick, went right back up. It tried right there, couple impulse breaks, but kind of held. So you can see where there's some good support in the market, holding down here for oil. And we're kind of consolidating right inside the middle. So what we can do later on is to look for a possible sell position if we close below here, not just like an impulse break. We really want to close below, and then maybe we come down to that daily, maybe to the next daily down in there. Okay, right now it's just trading inside here, so we'll let it consolidate. We're going to go into 8:30 in about what do we got, like 8 minutes. So we'll leave oil over here, gold. Okay, so broke that trend line, but again coming right back up, so no volume, kind of closed below here, coming right back up. So we'll watch how it reacts up here too. I will give you guys these two charts in the Zoom. 1 second, guys. Okay, so that's analysis on 4 charts, guys. What we did, if you're just joining us, what we did was gold and oil. We'll keep them on those 2 charts, and we have over here, we have US 30 and we have NASDAQ. Let me get rid of this consolidated box to keep it very similar to how NASDAQ looks. Okay. So I'm going to be looking to trade more into 8:30, 9, 9:30, 10, and then I'm going to be done trading then. So right now we're building off of this demand area. Guys, do you see that false break, what I told you about, like that red candle that came, see where it was, right down to that red line? Okay, that's why I said be careful there. You know, that's why I'm looking for sells below the red line. Okay, but it came down there and then got into that pattern, what I was telling you guys about right here, where I showed you if it could come down to the red line, bounce, come right back up. Now we're looking for like that W to do something like this. Okay, so that's why, but it did fill the range. You know, so if you're like a scalper and that's what you're looking for, like the break from there to the red line, it's 15 pips. So that's why I always measure the move. And then if it's worthwhile taking it, but you're not going to get like 15 pips because there's spreads, there's slippage involved. So maybe you would have only got like 10 pips out of that move, not the complete 15, depending on what type of broker you have and how fast they execute. But we all trade with different brokers, different spreads. Some brokers are later to react than others to execute you. Some of you guys are also trading with prop firms. So maybe that's not the best risk to reward trade to take. There will be better trades. So then you and I have to be more patient, okay? And thanks, guys, for everyone for joining. I appreciate all of you guys. Thank you, guys. Dave's day off today. We're going to give Big Dave a day off. You know, shout outs to Dave for everything what he does here on YouTube. You know, taking time out of his day coming on here. So it's nice, guys. Gold is up. Yep, gold is coming right back up. But again, it's coming right back up to this area, 1997. So it could just come up and you see how it gets a wick and push right back down. So we kind of want to see where it's going to close. I'd like it to close above 1996, above this 5-minute level, like right over here. I don't want to draw too many lines on my chart for you guys because then it might get messy. But do you see here, like this previous move where gold came up and it got rejected? See how we kind of, that's an impulse break from over here. And you see where it came up and then got rejected again. So maybe we have to be patient. Hi Bonnie, how are you? Welcome guys. Yeah, thank you guys for hitting the likes. I do appreciate it. We do appreciate it here. It helps with the algorithm, guys. It helps us get out to traders who are looking for free education. You know, that's what we're striving for on YouTube, is to touch everyone around the world, is to get to everybody who's looking for free Forex education. So your likes help others, you know. So you found us by people liking, you know. So if it wasn't for people liking, I don't know if we would have found you guys. So we want to extend it forward. Our mission is like pay it forward. So if you're getting, but don't just like because to like, you know. If you're getting good value, good content out of the channel, that's what we look for, and that's what YouTube looks for too. It doesn't look for fake subscribers. It doesn't look for fake likes. It looks for organic. We're very organic over here. We like to grow this thing organically. Okay, and half of trading is patience. Half of trading is patience. You know, it's discipline. You guys were, some of my friends were asking me, Ron, how do you fast? You got to be disciplined, right? So trading is the same thing. You have to be disciplined as a trader. If you're looking like you think you missed a move, and you're really like you have to be trading, then ask yourself, do I really need to take this candle? Do I really need to take this trade? Is it worthwhile me putting my money into the markets to take this setup right now? So if it's not the highest quality trade and you're in like a real tight consolidated area, then maybe it's not the best time to take a trade. Like right here, like what we can do is we can speculate a buy. We can definitely do that. Maybe if we want to get into like a small little buy at this demand area and see how it moves, and then if it starts to move in our direction, we could possibly add a position. But definitely US 30 is not going to trade in here going into like Wall Street. We might be breaking out of this critical area, same with NASDAQ. Maybe it's going to continue to push down. So inside here, this is that little range, and you have to understand, you're either building a longer position in here, or you're just scalping from here up to there, you know. But not a lot of traders understand from here to here, it's 40 pips. If you like that move, and you get 20 pips, you get 30, you might have to get out of the trade, because it could come right up to the trend line or to this red line and come right back down. So if that's the case, if you go up 10, 20, 30 pips, number one job as a trader is to protect your capital. Try and get into trades when you have a nice little cushion and go to a break even. That's my advice for everybody. But some people don't like that advice, because they go into a trade, they're up 30 pips, they go to a break even, and then it pulls back, it taps them out at break even, and then maybe it puts them in, if they stayed in the trade, 10 pip drawdown, and then it catches a wick and it goes right back up. And then they're like, oh man, why did I go to break even? But if you don't want to go to break even and you want to hit your stop loss, then sure, try that strategy. See how well it works out for you for longer term, guys. Okay, maybe that strategy might work out for a couple days, but if you want to be a trader, traders are thinking long term. When I trade, I don't just think for today or tomorrow. I think, can I survive and be a trader for the next 3 months? Can I still trade in 6 months from time? Can I still trade a year from now? So if you want to do that, you need to protect your capital at all costs. So I take a lot of break-even trades myself. There's nothing I can do about it. But at the end of the day, I'm still protecting my capital as a trader. I'm not just giving away money every single day because I don't like a break-even. That's the wrong mentality, guys. There's nothing wrong with break-evens. Absolutely nothing wrong with them. I look at them as positive trades. Okay. Sometimes you go into drawdown. That's the other side of the equation. Sometimes we go into drawdown, and then the market comes right back to our break even. It allows us an opportunity to get out at break even when we were in drawdown and to reevaluate the trade. Sometimes when I'm in drawdown and I get an opportunity to get out at break even and I don't like the setup, I get out. It's a winning trade. You were in drawdown and now you had the opportunity to get out. So Okay, guys, so yeah, we have news 8:30 durable goods coming in the market. So if you're unfamiliar with what it is, Forex Factory just will give you a quick little glimpse of what it is right here. 8:30 USD red, orange folders, medium impact. So we're going to get some news in 45 seconds. Okay, so right now we're building like a double bottom on US 30. We can see this is our resistance right there, 31,717. We can see where the resistance is. Same with NASDAQ. We can kind of see where our resistance is right here on NASDAQ. And again, just please guys, pick which security you feel comfortable trading. I like trading personally US 30 over NASDAQ. That's just me personally, but there's other traders who love NASDAQ over US 30. You trade what you want to trade. We also have gold and oil. Gold is still pushing up nicely. Let's see how we open in 8:30 with some news. You don't have to jump on the first news candle. You can wait 5 minutes for it to close. Okay, so here's the open. Okay, so it's red. Okay, NASDAQ came up a little bit, caught a wick. Again, we're inside this range down here. Also, if we can kind of close below that red line now, maybe I'll look for, maybe if we're going to continue to push down, maybe a short position below there. Both lower than expected, sorry. Okay, let's take a look at gold. Okay, so gold is now, let's see how it can react up here at 2000. Okay, because it could come up for another top and get rejected and pushed back down. It's got nice momentum, okay? So RSI can continue to move, but what I'd like to see is a close above 2000, okay? I don't want to just hop in and then it just breaks out for a little bit, catches a wick and goes right back down. I'd like to see where this candle is going to close. It is building strong momentum. If you guys have bought from the bottom, that's great. You guys got in at perfect opportunity down there. Oil is just, it's not even moving right now. So we'll continue to watch oil. Here's gold now, 2000. So we're coming right back up to that high. What we want to see is an impulse break. This is where we want to see it to create a new higher high in the market. Okay, so that's beautiful, okay? So that's a nice push on gold. We see that nice new higher high. Now it claimed a new high in the market. So now we want to see, can it close like above 2000? Or can it come back down and at least hold maybe 50% of the green candle, which is like 1998, like right there. Can it hold right there? I'm going to start to eliminate some of these red lines. Very nice, okay? Very nice move on gold, yeah, very strong. Let's see the indices. So the indices are getting rejected, okay? So we'll watch down here for US 30. Maybe now I look for a possible sell on NASDAQ. We already broke for that lower low, got rejected. Maybe if we come back down with more volume and then close and then maybe push down, we could look for possible sell. Same with US 30 right there. Okay, so yeah, gold looks real nice, guys, okay? So for you guys, I know some of you guys in the Zoom, you guys DM me and told me, Ron, I've been building up my position on gold. Congratulations, guys. I saw some of you guys have been building it since 1990, and you guys are up over 100 pips. So yeah, gold is moving very, very nice lately. Okay, very nice push, but let's see where it closes too. If we're not in the trade, I'm not in it. So do I just want to buy the high of the candle because I see a big exciting green candle? You know, I used to when I was just learning how to trade, and then a lot of times I got caught buying the high, then the next candle would come down red for a retracement, and then I would get stopped out. So maybe we wait for the candle to close if we're not in it. And that is a fill almost right up to that next daily. Yeah, remember what I told you, the yellow line, 2003. Okay, we were off by a tenth of a pip. Okay, so that filled from here, the high, to the next daily. Okay, so we're still watching indices. Let's watch how gold closed. Oil is doing nothing. Okay, so oil is still holding, but I want to see if oil can hold above 50% of this green candle, like right there. If it can still hold this position, $67.20, this might be bullish. Okay, and we have 1 minute 60 seconds left on gold. Is anybody in any trades? Sorry, guys, I didn't ask you guys. I was just reading some DMs that some traders were sending me in Zoom. Is anybody on YouTube or anybody else in the Zoom? Are you guys in gold? GU, Agent Smith? Yeah. Okay, so we caught a little bit of a wick near that daily area, okay, 2003. Okay, so now it's pushing down. Okay, so it kind of filled that range, but now let's watch the close. The close is now in 10 seconds. So this is where what I like to do is this big red zone, I like to flip it green to see now, are we going to pick up some bids in here now? See now how it got rejected and we're right back below here. So next candle may open red and come back. And what I was looking for is a retest right here where I placed that red line. That was essentially 50% of the candle. So now it's coming down. Let's see how it reacts at that red line. And we want to see kind of a rejection. We want to see a wick and then continue to come up. If we can't hold here, then that to me is a false breakout with a higher high. And maybe it's going to come back down and trade in here. And then where could we look to short gold if it can't hold this momentum? Maybe right below here. Okay, and we can watch oil coming right back up. That's what I mean, guys, okay? So, you know, what I was saying, if you buy the high, now you're in drawdown. So, if you're not buying the high, you wait. Abdulaziz made 3,000. Congrats, bro. Wow. So, you know, some traders can get in and get out. You know, that's the beauty of pipping and dipping. I'm that type of trader too. You're not going to see me holding trades forever. I like to just get in and get out. That's why I have targets. For example, if I bought that gold candle, I didn't, but if I did, when it came close to that yellow line, I would have been scaling out. Okay, because if you don't, now you're holding for a bigger move. Like it gets up to the yellow line, but then we're waiting for the bigger breakout. But that's why I do that. That's why I take my time doing the top-down analysis, because you identify those levels. And then if you didn't, now you're in drawdown, or you possibly hit your break even depending wherever you bought in. Okay, so this is how gold moves, guys. We broke a critical daily area and now it's getting rejected. Look at it now. Now a big bearish engulfing candle. Let's see where this candle can close. Can it close down here? Maybe retest, and maybe we're going to sell it down here. But there's the wick now. So maybe it's going to play around in this area. Okay, so let's see what the indices are doing. Okay, so holding here, still bullish. Okay, there's some nice divergence still. Okay, so I'm going to watch where this candle can close. We're still below, remember the trend line right here, the red trend line. Okay, so we came right back up and we touched the trend line. I'd like to see if green volume can maybe possibly close above that trend line, maybe come back and retest it. Then maybe I'll look for a buy on US 30. But again, I don't want to just buy a candle that's strong near the trend line because it might get rejected and come down red again. So I'd like to see it close above the trend line. Okay, and let's watch gold. So gold is coming right back down. Let's watch where it will possibly close. Sherry up 0.5% so far. Congratulations. That's awesome. You know, for a Friday to get 0.5%, 1%, it's beautiful. You know, most retail traders get worked on Fridays in the markets. I'm not going to lie. So if you're managing to get some profit out of a Friday, it's beautiful. And then what I suggest is go on with your day. Like, you know, I had this conversation with some of the traders in a one-on-one a couple of weeks ago, and they said, Ron, the hardest thing is just stop trading. They're telling me I'm hitting 1% in maybe 30 minutes, and they just can't walk away from the markets because so fast you hit your 1%. I'm like, yeah, sometimes I hit my goal in first 10 minutes of Wall Street Open. And that's the beauty of being a trader. You can walk away and go do other things. You don't need to sit in front of the computer and make a 6-8 hour day out of it. You're not in the office anymore. Like, it's not, you don't want to treat this like a 9 to 5 job. Okay, so again, if we're not in a trade, this is a lot of volatility. We had a big green candle that just broke out of here and a red candle come right back down. So the market is still, it's got a lot of indecision right now on gold. It came down, just picked up a wick, coming right back up. So you can see now how the volatility opened up with some news. Okay, we're going to also watch where US 30 and where NASDAQ will close in the next 30 seconds as well. 600 viewers on YouTube. Thank you guys. Appreciate all of you guys. I know you guys were probably expecting Dave. I don't know if he told you that he was going to take a day off. He's got a doctor's appointment. Not sure if he told you, but I'll be filling in Fridays for Dave because he's going to take Fridays off now. So you might see we might be doing a London session together instead of a New York session going forward, but we will let you guys know on YouTube as well. Okay, so here's the close. We're opening green again. So we're below that big green box. So like I go through the motions again and then I flip it red. So to signify that maybe it's going to still be some resistance going forward. If we come up here green, so I'm still in no trade. Oil's not the greatest to be looking for a trade right now. So myself, I'm not in a trade. I got to be patient. US 30 came up to that trend line. Do we see it close above? No. So it got rejected and a red candle coming right back down. So you guys can see this is not the greatest price action to be trading. It's not like I'm looking for a trade just like you guys, but I'm not going to force trades just because a candle opens. You know, we got to look for the kind of the best setup possible. You know, we might have to wait till 9 a.m. We might have to wait till Wall Street. Now, if gold can continue to accumulate and come and close above 2000 and close above here, then it might be looking for a nice buy. Okay, but we got to see it come right back up again. Okay, came up to about 50% of the red candle and just got rejected. So let's see what type of momentum it has coming up. Oil getting rejected. Let's watch oil below here as well. Okay. Wow, Mr. Free Guy, every Friday used to be a lost day, but today nearly up 3%. Man, that's amazing. Good for you. What I would recommend also, Mr. Free Guy, this weekend is go and review today all your 3% and see what you did really well today. Go over your journal if you do journal. Learn from your positive trades that you did today. Go back also in the past and learn why you were losing so much on Fridays. And that's another thing too, guys. Make sure if you guys have a bad day or a good day, you guys are learning from it so you don't commit it in the future. Okay, so gold is indecision again. Okay, we don't want to buy or sell a spin top candle. It's a neutral candle. Okay, gold doesn't know where it wants to go right now. Oil is trying to push down. You see what I mean? Like US 30 got rejected. NASDAQ, like it's barcoding, red, green, red. There's not much to be looking at right now. So unless you're speculating, okay. Scalpers are also speculative traders, or you can speculate. Like if you think it's going to go down bearish, maybe take a small sell, small, like a 10 cent lot, 10 cents, penny lot, and just feel it out. If you're going to think it's going to be a buy, go in for a small buy and just test out the waters. If it goes against you, you can cut it. Maybe you lose $2, no big deal. But you're speculating with the market. If you don't need to jump in like that, then just be patient, be disciplined, look for something of quality. Like, what do you guys like this type of volume, or do you guys understand what I'm saying? It's very choppy right now. Like, it's very hard to distinguish where things are moving right now. So as a price action trader, you need to be able to identify this type of price action. It will help you be that much better of a trader. The best thing too, guys, if you someone asked me too, said, Ron, if I don't know what's going on, then that's perfect. If you don't know what's going on, then don't take a trade. Why force a trade when you have no idea what's going on? When you take a trade, you should be confident with the direction it's moving. Like right now, I have no idea where gold is going. Yeah, we had that nice big bullish breakout on the news. But then it came right back down to here, and now it's just still building. Oil came up to here and came right back down and coming right back up. We have no idea what it wants to do. Now we see the markets now are pushing off of this. So I'm just looking for this body to kind of close, maybe above this red line now, and see how it will react at this trend line. Let's take a look how it's going to close here. Okay, in the next 10 seconds. Also, where do we have like resistance on NASDAQ? Like right around here is our resistance, 12,640. Okay, so here's the close on the indices. And this is a new 15-minute candle opening too, okay? So this is a very important candle. This is a new 15 in the market, okay? So we're still below the trend line, okay? But it's building. Gold is pushing back up on the new 15. Yeah, it's right, pushing back up, but I like to see it close above 2,000. Okay, unless you guys are building a position, it's building nicely, but I like confirmation. If the buyers are serious about gold, then they're going to figure out a way how to close it above 2,000. VCT next for gold is 2007. Yeah, if it can close above 2000 and work that 2000 area and collect a lot of bids, no doubt gold can get up to 2007. Probably break that 2010. So it could be a big bullish day on gold today. We'll see. But Wall Street will dictate the move. Okay, this is just like a little move before the bigger moves. Okay, now we're pushing again, we're working the trend line, okay? So, but we also want confirmation of volume closing above here so that we can use the trend line as support going forward for buys. Again, if we're just buying here, it might just break out a little bit, catch a wick and come right back down. So I'd like to use that trend line as an area of support going forward. So I'm watching US 32, gold rejected again in this red area. Oil is just right in the middle here. So this is typically how Fridays trade, so like I know we all want fireworks, we want amazing volume, but Mondays and Fridays are traditionally like this, okay? And I want you guys to learn this. The best volume to trade is normally Tuesday, Wednesdays, and Thursdays. Mondays are tough because we're coming off of a weekend and market makers like to position moves for the week. They trap a lot of retail traders. Also Fridays are a trap day. Sometimes they're really good, but for the most part they're trap days because they trap retail traders and grab liquidity, position themselves for the upcoming week. So you have to be very, very disciplined trading Mondays and Fridays. Okay, you see what I mean? If you're buying, it broke the trend line but coming right back down. That's why I'm waiting for volume to close above the trend line. Okay, I don't want to play games today on a Friday. Same with gold. I'd like to see it close above 2,000. Okay, every time it's coming down now, it's picking up good bids. We didn't really break the trend line down here, so it's coming up strong now. It's going to close in 2 minutes. Let's get the close above 2,000. But if you bought that green candle, okay, and you're still holding it, I don't know where you bought in that green candle, but I'm just saying like right up here, it came down there. That's about a 60 pip stop loss. Like it's not a small stop loss. So not a lot of traders can withhold a 50, 60 pip stop loss. So you got to understand, if you want to trade this, And what Dave also says too is lower your lot size and give it more room to breathe. That's what I see a lot of traders are failing at, not just on YouTube, but also in Zoom and also myself. When I get stopped out, my stops are way too tight. So if you want to let it room to breathe, you got to know how much range there is in the candles, how much volume there is. So these average candles that just opened up are big candles. So when I say 50 pip stop loss, everyone looks at me like, Ron, whoa, that's crazy talk. But it's not crazy talk if you're willing to hold the trade and to go into that direction. So then what you got to do is you got to lower your lot size. Okay, you might not go with that bigger size because now you can't go with a 20 pip stop loss. You maybe got to open it up to 50 pips. And then maybe you're going to start to see in your journal, you might be getting in more profitable trades now. You might have more blue trades. Yeah, some of them may go into drawdown, but they might recover because you're giving it room to breathe to collect bids. That's what the market is. It's an auction. So if you allow it to collect in your favor, you might have to open it up. That's why I didn't like to buy US 30, because no volume closing above the trend line yet. Okay, so I'm still waiting on US 30 myself. Gold now, let's watch the close. Here it is, the close. Again, we're closing above. Let's flip this to maybe green to look for a retest. Okay, so it may come down red. Kusmikru, when are we getting in XAU? You can get into XAU whenever your heart desires. There's been traders who have already been trading it, so you don't need to wait on me. I'm not telling you what to do. You decide what you need to do for yourself. That's what trading is. So you're not always going to be trading with SST. You need to learn how to trade for yourself. So some traders already went in buys. They never asked me anything. I asked them. I said, "Are you guys in buys?" And they were already in it. So you need to learn, okay? If you feel like you like the setup, then go, like I said, but just monitor your stop loss and your size that you're putting in the market. Okay, so we came down red into the green box. Okay, so that's a nice retest in there. If it holds, I'm going to look to maybe buy this candle. Okay, so this is the first candle that closed above and the first retest. The retest came about 50% of that green candle. That's perfect retest, and it's holding. Yeah, I'm going to buy now gold, okay? So I'm going in myself personally in a buy. I'm going to manage my own risk, okay? And what I'm looking for is to come up, back up to the yellow line with momentum. If it can get up to the yellow line, and try and break for a new high up there. So if it can come up to the yellow line, I'm looking for about 20 pips. And then if it can kind of punch out of there, maybe 30, okay? And then stop loss. Everyone asks, where's your stop loss? Well, we just saw how the structure is being formed. So everybody has different stop losses. Some traders place a stop loss right below where this wick started. Some traders will place a stop loss below here. Other traders might give it all this entire room to breathe to continue to build and break out of here. So it's all how much you're willing to risk on a trade, how much your lot size is to understand your stop loss. But now I'm going to see if it can work this green box to pick up bids in here. Oil, guys, let's pay attention to oil too. Maybe coming up here. And then let's see the indices. Okay, so we have US 30 holding this area too. I'm looking for US 30 to close above here as well. Okay, I also like how US 30 is building. I'm going to go in a buy now on US 30. Okay, so I'm going to enter a buy on US 30 myself. So right here I'm buying. Let me just do this, sorry. Okay, and then stop loss will be placed below that red line, the previous area. and I'm going to see if it can come up to here, possibly break that daily area for US 30. And we'll watch oil as well. So if US 30 can pop up to this red box, that's about 40 pips. If it can get up to the yellow, it's about 50. Okay, that's what we're kind of looking for, to maybe tap somewhere up there. Dean, where's my stop loss on gold? You need to understand where's your stop loss on gold. Again, I told you the areas. You can have your stop loss, a tight one, right below this candle if you like. But how much are you willing to risk? Okay, I took the buy there. If I have my stop loss there, it's risking 30 pips. Some traders, I told you, are risking 50 pips below the previous trend line, below these liquidity grabs. So it's all how much you are willing to risk. Okay, so we're going to close now in 10 seconds. We made a higher high on US 30. Let's see if we can stay above the trend line now. Let's see if we can build something, because the next candle may come down red, and we got to see how it will build now. Okay, that's what trading is, guys. To get into a trade, and also to understand that sometimes they're going to come down to grab liquidity and go against you in a trade. Okay, there's the pop. Okay, that's a nice little pop. But let's build off of this. Okay, but guys, it looks like it's a small candle, but this thing is moving, guys. I'm up 30 pips right now, okay? So I know I'm not talking, I'm just managing my account right now. So I'm in, you can go to a break even if you like on US 30, okay? Over 30 pips. If it can just come near that red box, that's about 40 to 45. If it can break, yeah, there it goes, okay? So then boom, there's 40 pips on US 30. Keep going. So I'm going to scale out up there. I tapped right up there. When it came up there, I secured 40 pips on US 30. Okay, so that I'm out of it. That's it, right there. With gold, I'm still nursing this gold, but what I'll maybe do is maybe cut gold, get rid of it. I went in a smaller size on gold up here. I don't really like to trade gold too much myself. I'm more of a US 30 trader. I went a little bit bigger on my US 30 because I'm more comfortable with trading US 30 than I am gold. If you catch me trading by myself all day, all I trade is US 30. But again, we can still watch. If my stop loss is down here, it still hasn't been activated. Still watching it, but we're in this green box, so we got to let it room to breathe. But US 30, I love it, okay? Why did I take that buy? We broke the trend line, we had the volume above there, we closed above, and got the next push with the next candle. Same with NASDAQ, very similar. Yeah, gold is a love-hate relationship, a love-hate with gold, okay, for everybody. We're attracted to it because it's gold. Guys, this is 50 pips right now, okay? So please, if you're not in at break even, I don't know what else to tell you. But US 30 is 50 pips. Here it comes up to 60, 60, not 6, guys. This is a fat candle. Okay, there it goes. There's the pop. 70 pips. Okay. Really, really nice, guys. Okay. So now stop loss. If you want, go to a break even like that. Go to a break even. And you can also scale out up there. You don't need to look for a 200-300 pip candle. At 70 pips, maybe take 80% out of your trade and leave 20% running with a break even. But I'm not going to tell you guys what to do. Oh my goodness. Oh, why didn't we stay with the US 30? So I got stopped out on gold. I got stopped out for 30 pips on gold. So I'm out of gold. Oil is breaking out too, but let's see if it can close above here. But adjusting lot sizing can help too, guys. So I went a little smaller with gold, and I went larger with US30 because I feel more comfortable trading US30 myself. So even though I got stopped out, I still made up a nice difference with US30. But let's watch oil too. Okay, can oil close above here? We have not closed above this area. Okay, we tried at 6:45 a.m. Eastern. So now it's almost 9 a.m. Okay, so remember now, guys, we're getting a new hourly candle right now in 30 seconds. Okay, so also for US30, let's see if it can close above that daily. Okay, I'm going to flip this red box to green now. Okay, that's about 90 pips, guys. Guys in Zoom, if you're in US30, congratulations. But 100% you guys should all be at a break even. Okay, when you're up 90 pips. But you should also be scaling out a little bit. Okay, so here's the close, and we're going into 9 a.m. Okay, this is a new hourly candle. Okay, we're going to assume that maybe this is going to come down red to retest here. Let's see if it can hold. Okay, so this is the retest in this green box. NASDAQ got rejected right up here and continue maybe push down. Let's see what this gold is doing. Gold is too much indecision. I'm staying away from gold. Oil is a buy, guys, if you like oil. It actually closed right near there. Okay, flip the zone. And oil is holding here. Gold is coming right back up. Okay, so this is gold. Okay, welcome to gold. This is how it trades. It's frustrating, I know. Okay, and then now you see it come right back up. So it gets really frustrating. And then we hit a buy up here again, then it will come right back down. So again, I'm going to wait to see if it will close above here. If not, I'm not even going to trade gold. I'll focus on US30. Right now, this is the 9 a.m. candle coming to spoil the party. Okay, it came up nice, big and bullish. It broke out of there, a new higher high. But the volume closed above, we assume it's red, and now it's coming right back down. So that's why I tell you guys, make sure you secure a little bit. Don't get too greedy on a move like that. Warner, if you're struggling with gold, then stop trading it, brother. Stop trading it, you know. If you keep losing on gold, stop trading gold. Like I don't know how else to explain it to everybody. If you have losses on, that's why journaling, guys. You got to look at your securities that you're trading. If you're having multiple losses on some of these securities, stop trading them. Trade with something you're more comfortable trading. See, maybe I got stopped out too early at 30 pips. Maybe I should have held my stop down there where I originally said, and then now I would have been in profit. So, but this is when you're managing two trades. I was in US30 and this one at the same time. That's why I don't trade multi securities, guys. I like to just trade US30 all day by myself. You know, like that's all I'm focused on. You will never see me flipping, trading oil, gold, GU, and then because then you get caught in multiple trades. Then it's hard to manage them. Look at oil, okay? Man, I'm talking too much here, but oil was an excellent buy. Gold is right back. So maybe they came down just before 9 a.m. to pick up liquidity and coming right back up. So maybe my stop was too tight at 30 pips. Okay, maybe it was too tight. But I'm not going to go with woulda, shoulda, couldas. I went with a certain percentage, and that's what it worked out to be. Oil, guys, right to that next daily. If you got in oil, okay, oil closed like right there, and it was a beautiful candle coming up. Oil is 50 pips. Gold, let's see if gold can continue to close up here. Okay, it's pushing now, man. And let's see if US30 can hold this area. Good job, Ian. You got that oil, 45 pips. Excellent. Allah, gold hit your stop loss and pumped. I know it did to me too, but what can we do? Hopefully you got maybe in the US30 trade. Yeah, Honcho, why you can't trade US30? I have no idea why you can't trade US30. That's a question you need to direct to your broker. Okay, if you, maybe they don't allow small accounts to trade US30. I have no idea. Like, how do you want me to answer that question? So, just any brokerage questions, guys, you need to contact your broker. They have excellent customer service. Just ask them. Send them an email, and I'm sure that they'll answer it. But yeah, not a lot of brokers allow you to trade indices if you have a really, really small account. Okay, so let's look. 20 seconds to go to the close. Again, oil came right up to that yellow line. Okay, so that's why I have these lines on my chart. That's why it filled the zone. Gold might come all the way right back up to that yellow line. Let's see. You know, as much as I hate gold, I could be looking for another trade, but also I'm looking at US30, how it's holding position right here to see if it will continue to build. Okay, so assume it's going to come down red for a possible retest. Let's see US30 holding. This could be a nice 3-bar play. If it starts to break out of here, I'm gonna continue a buy. If it breaks out of here, like above this red line, as long as it can hold this ignited bar, it could be a nice 3-bar play developing. Soon as it can kind of break this red line, I'm going to go into a buy to fill the top wick and continue going. Okay, it's getting up there, it's trying, okay, but I'm looking for it to break that the previous resistance. It's got a nice ignited bar. This is a nice 3-bar play. This is a real technical pattern. If it can build, it's kind of like a quick little bull flag, a 3-bar, but it needs to hold this ignited bar. If it no, so see how it hasn't broke yet? So still hold off, don't take it. It's got to come and touch and break this high. Let's see if it can pick up some more bids down here. Okay, see how it came down now? So when it came down, it's picking up bids. If you have a depth of market analysis, you can see that it's picking up bids. But every time it comes up, it's encountering offers. So it's kind of the candle is kind of consolidating itself, but it's still holding an ignited bar where it opened. Now we're coming right back up. So if it breaks here, I'm going to buy. I'm going to buy the break. Yeah. Okay, so it's coming up there again. It's trying. Look at it. Every time it comes to the red line, it's tapping but not breaking it. Okay, and then if it doesn't break within the 5 minutes, it might hold here and we might have to look at the next candle. But right now it got rejected, so it's pushing down. If we lose where it opens, then unfortunately it's going to come down and test the previous low, like right now, shooting star candle. So no buy. I was looking for the buy. I really wanted to buy that 3-bar play, but nothing broke above there. So patience, and now it's coming right back down. So let's see now if it comes down, picks up liquidity. Look at gold, okay? So gold is closing above, back down red. But every time it comes down, it's picking up higher lows. So just kind of got to be careful with gold, okay? I know it's a tough one. Gold is not the easiest to trade. We have a lot of divergence bearish divergence on gold. Oil is looking good to break out. So possible sell on gold. I'm going to look if it breaks this structure right here. I'm going to look to sell below here. You know, as much as I don't want to trade gold today on a Friday, I told myself that. But it's always when we trade together. Okay, I'm going to look for a possible sell below here. Why? Because every time we came down, you see those wicks kind of got held there in that area. That's where we kind of got held. So I want to see how it will react. And with that bearish divergence, if it comes down here, break the trend line, and we close below here, gold could really start to maybe pull back down into 1990, 1988 down there. Oil is off, guys. Okay. Where did I learn to trade? I learned to trade in front of my computer by putting in time and putting in effort. Okay, gold, beautiful. Came right into that green area, picking up the bids. So gold may continue to move. US 30 is still kind of consolidating inside here. NASDAQ still inside here. Yeah, lots of blood, sweat, tears, and money. And time, lots of time. I didn't learn this overnight. It took me years and years and years. I started trading when I was 18 years old. I was even trading before 18 years old. Opening up a demo account when I was 16 years old. Didn't know what I was doing, but having fun clicking the buttons. I'm 41 years old, 41 years young. Okay, so gold, again, we're above 2,000. It's holding. So it's up to you guys if you want to continue buying. I'm going to stay away from buys. I just don't like gold up there right now. Don't like the way how it's moving. I'm going to be patient on gold. Oil was a really nice setup, guys. Oil was good. And nothing yet for US 30. So let me just get rid of this, okay? So so it doesn't confuse you guys. I'm kind of out of the buy, but what I'm going to look for is maybe a continuation above here. That's what I was looking for that 3-bar play, but it was not there. It wasn't developed yet. Okay, so but for later on, maybe if we go into like Wall Street and we're coming up here, maybe that might be our break that we can take up to there. Okay, and if you guys are still holding US 30, this is possible retracement down 50% of the green candle. And then your break even is down here. But this is why I say, guys, when a candle comes up like 60, 70, 80, 90 pips, don't get too greedy. Guys, you can probably tell my mouth is getting dry. Okay, for you guys that don't know, I am fasting, and you know, a lot of talking. You know, I don't know if a lot of you guys do Zoom calls or talk for work, and you probably have a bottle of water or a tea or a coffee or something you're drinking with a lot of talking. I tend to lose my voice normally when I'm streaming. So you guys probably hear it in my voice always when I'm streaming, even when I'm not fasting. So this makes it even more difficult, but I still enjoy this. I love doing this. So I hope you guys are learning. I know I might not have as much energy as I normally have, but it's not easy. And for me, I don't know what time it is for you guys. It's 9 a.m. So I have to go tonight till 7:40, it's about 7:40 p.m. before we break our fast for iftar. No, I don't smoke weed when I'm fasting. No, sorry. I'm completely clean for this month. It's the holy month. No weed, no nothing. I'm completely clean. I don't drink alcohol normally. I don't drink alcohol, so I don't drink alcohol normally. Alcohol is not an issue for me. I don't drink alcohol. I drink Gatorade Zero, the blue one, sugar free. No, Maman, you can't drink water while you're fasting. No, nothing. No liquids, no food, no agent, no sex either. You have to refrain from that. It's the holy month. So if you can sacrifice 1 month, 1 month, like even if Ramadan was 2 months, it wouldn't bother me. It's just you're sacrificing yourself for 1 month. It's not that difficult to do. Sun up to sundown, yeah. Summertime it gets a little tough, like even if you're in Middle East, where it's very, very hot, you could imagine how difficult that is. What fluids can we drink? No fluids, nothing, nothing. You cannot, nothing, guys. No fluids, no food. You can't even chew gum. Nothing. Absolutely nothing can go in your mouth. No water, no water. Just basically your spit, And that's why when you talk a lot, my mouth gets really dry. No smoking, no nothing. Yes, Nora, I don't smoke weed this month. Normally I smoke weed, guys. If you guys know me, no weed for me for the entire month. I gave all my weed to Dave. Dave will smoke it for me. Dave came over and he took all my weed. Okay, guys, so it's 9:15. I love the chit chat. I love the talk. It's awesome. Love educating you guys on Ramadan. And guys, if you know me, my father's name is Ramadan. Okay, so just for you guys that don't know that, my father's name is Ramadan. Okay, so it doesn't get any more Muslim and hardcore than that. So I come from a background from this. So. My father's name is the holy, holy month. Okay, so I'm not going to take any trades leading into Wall Street. We're going to see what happens. But guys, this is scalping. Okay, so this is why I tell you, even in oil was a beautiful move, 50, 60 points up to the yellow line. But again, if you don't scale out up here, look at what happens. Then the market reverses on you. Okay, and then it takes, same with gold. If you were in a buy on gold, it came up here. If you don't take anything out, it reverses on you. Same with US 30. We took this buy right here, down here, and it came up beautiful for 50, 60, 70, 80, 90 pips. If you don't take anything out, it might retrace on you. Okay, so remember, guys, this is scalping the markets. I'm not looking to take a trade and hold it for an entire day. I have to have a different mindset trading to do that. I used to do that, but this is just scalping from a zone to a zone. If it's a nice zone and it comes there, then you need to make a decision. You have to make a decision. And I tell you guys all the decisions that we can make. Number one is we go to a break even. All of us. I said when it was here, we should all be, when we were up 40, 50 pips, everybody should have been at a break even. If you want to hold the break even trade now, you see it's coming down, it's going to tap your break even. So that's why when it came up there, I told you guys what to do. Either close the trade and get some pips out of the market, or take a partial position out of the market. You can close 50%, 60%, 70, 80%. A lot of traders like to take out 80% at the high and then keep 20% running with a break even. So if you kept 20% running, now your little 20% runner might get caught at break even, but you still secured 80% of the position at the high. So that's the job of a trader. And like if that was your trade of the day, you could be done. Maybe that's your 0.5%. Maybe that's your 1%. Maybe that's your 50, 60, 70 pips for the day. And you could be done. And that's it. And walk away from the markets. But this is frustrating. Sometimes when we go in a trade, we hold because we want bigger move. We want 100, we want 150, we want 200 pips, and then the market comes back down and retraces and humbles us. And you see now how it's coming down for possible going into Wall Street. So this is why I always tell you guys, don't get greedy in these markets. Another big thing about Ramadan, guys, sorry, as we're talking about that, is give to charities if you guys can. Help out your homeless. In right after Jummah, I go to like a shelter. I bring food for them to help. It's giving also, excuse me, to charity. So that's what it's also meant for too. It's not just fasting, like not eating or drinking, but it's to show, to appreciate the abundance that we have in life. You can survive one day without eating, but homeless people, maybe they don't have the food to eat. So you can imagine how they've been, who knows how long they've been fasting. They eat a little bit here and there, but it's good to give to charity donations, guys. I didn't tell you guys this, but my profits, what I do on Fridays is I give to charities. I don't give it like cash. I don't go handing cash to them, but I buy food and I go hand it to them. Could I give them signals? Yeah, if they want to learn, I've offered to teach them how to trade, but a lot of them, they don't have access to telephones or computers or things like that. Okay, so oil is holding this position. Let's see if it can hold going into Wall Street as well. Maybe we'll get a continued push on oil. Gold is too choppy, guys. Gold is messy. But what I'd like to see on gold in Wall Street, if we can come back above 2000 and hold up here, maybe we're going to continue breakout, or we're going to look for maybe a possible sell below 1996. If we can't hold this area on gold, I can see it retracing down. With the indices, okay, we're going to continue to watch above the yellow line up here. What we'll do is we'll extend this box up to here. We'll look for buys above here for US 30 and maybe for sells. Okay, see what we did? We came down 50% of this green candle right here. So let's just adjust our zones again. That's where we're finding some support right now. This is the big support down here. So for Wall Street, I'll be looking for a potential sell below here. Okay, we'll look for something below here. Okay, so this is now supply. Okay, so I'm just flipping the zones and I allow the volume to come to me. Okay, that's how I trade these markets. I allow the volume to come to me. I'll look for buys again if we can close above here and retest this, and maybe we'll break out. Wall Street's very close. We're only 7 minutes away. So it's getting very, very close. That's why I don't like to be in any open positions. I try not to be. Sometimes I get caught in trades and I have to hold them going into Wall Street. But right now I'm out of my trades. I took a stop on gold, but got some good profit out on that US 30 buy. So what I'm going to do now is wait for Wall Street to open up. We'll see the move, how it's moving. Gold is in this kind of higher high, double top that got rejected. Then we broke above there. We're still maybe in this kind of parallel trend line that we could get out of here and break out. But below here, 1996, we could look for a possible sell because we have this could be considered one big top and this could be considered another top. And if you look now, you can see the divergence. Okay, if I was to connect this high and all this high, and then the peak high right here coming down, you can see that the strength is decreasing. So below 1996 is where we could look for a sell on gold, below here. Okay, like below this level. David, why didn't I sell US 30 50% of this candle like right in here? It's just getting so close to Wall Street, David, that sometimes maybe I get into that, then it starts to get choppy for Wall Street. Then sometimes you're in a sell, then it breaks out, and then you get caught. So I got my pips out of the buy, and then I was happy with that. Um, Again, I don't get too greedy when I trade. You don't need to take a trade and then get right away into another trade. You can sit back and review the markets. Okay, and oil is still holding. Okay, oil might be, it came up, back down, coming back up. So we'll see how oil reacts above this yellow line going into Wall Street. Okay, it's holding nice. Oil might be continuing to push bullish. Okay, so again, it came back down. It retested the original breakout area. It held very nice and got a nice big bullish candle. Okay, so we're about now 5 minutes away from Wall Street. Okay, and we have also red folder news at 9:45 right over here. So make sure everyone you pay attention to this. 9:45, like the first 15 minutes right after Wall Street opens up, we have 9:45. Then we have two red folders for USD, big folders. We have flash manufacturing PMI and we have flash services PMI. So this is going to be volatile. Okay, so especially with Wall Street's open. So be careful trading. Okay, this is where a lot of volume enters the market. It's New York Stock Exchange. The equities market opens up for stock trading, plus all of this volume, and then we have those red folder news. So you can imagine there's going to be a flood of volume coming into the markets, and these candles are going to start to get much bigger than what they are. So this is where you have to proper risk management. Like you might have to scale down your size now because the moves might be much bigger. Yes, if you hit the move, you're going to make some good money on the way up or down, but you also have to think on the other side. What happens if you go into drawdown and you take a big trade? And these are big moving candles, so you have to factor that in. Okay, and then we can kind of see like what's building. It came up, it came back down, coming right back up. So is it going to develop an M top and maybe come down? I'm an aggressive scalper, so sometimes I'm looking for a sell here and like right below that neckline. That's what I could do now. So I could be looking for a sell position below the neckline, but also with volume closing, because it could just be like an impulse red candle that breaks down. If you're fortunate enough to get it and it moves down in your favor, you could. But what I'm doing is I could draw a green box right there and then be below it right there, just in case it's like a double top. Maybe it extends out, it's a fake breakout to the high, and then it catches a wick and comes back down. Then maybe we can sell below here. NASDAQ is so tight and consolidated, I'm still going to keep the move for NASDAQ below here and still above there for NASDAQ. But now we're pushing right back up. Okay, so it came retraced all the way back down to where we originally bought in. They tapped maybe all those break evens, they tapped all the pending orders down there, and now they're bringing the market right back up. Oh, Yoda, okay, sorry guys. Yoda, you can unmute.
Mr. Ronnie.
Hey Blair, what's up, bro? Guys, we got the Yoda in the house. Yoda, quick analysis on indices. What are we going to expect in 2 minutes?
A quick one?
Well, yeah, because we got market open now.
I'm looking for a quick gap fill, and then we'll see. And then we have the pending news. But right now we got a small little gap at open expected here. So let's look for a little push, and then we'll see what happens.
Okay, so gap push to the upside for NASDAQ and for maybe US 30, but let's see where it closes. What we could also do is flip this big red box to green again, and we'll see if it can come down and pick up liquidity in this green box and hold for bids in here. We haven't had a breakout on NASDAQ yet above 12,660 here,
It's tried multiple attempts, but maybe with this Wall Street volume, we can get out of here. So we have about a minute and 20 seconds to go, guys. So please, again, practice risk management, guys. Don't do anything silly because it is a Friday too, unless you're willing to deal with the consequences. That's what I tell everyone. Just like I tell my kids. I tell them, if you guys are going to fool around, you guys are going to deal with the consequences. So if you guys are okay with that, then just deal with it. But we are breaking out. Be right before. Okay, so it's a strong breakout. Are they going to continue? Wow, holy. Okay, sometimes they catch like the move right before. But if you're not in it, don't just like jump in just because now you see the green candle. Because what they could do is, as soon as market opens, could be a red candle that comes right back down. You can't like just always. That's that FOMO, fear of missing out. That's why we struggle as traders, is because you know how hard it is to resist buying this green candle. But that's where they get you. Okay, so NASDAQ broke out. Okay, so that's good. We broke out a new high. Okay, claimed a new high, but here's the close now, 5 seconds. So let's all watch for maybe a possible close, retest. Let's see what we get. You might have to be quick on market opens. Okay, so here's the red candle coming down, quick wick. Okay, here's the push. I'm going to buy US 30 as soon as it breaks out of here. I got my finger on the trigger. It was an equal high, but if it comes back above here, I'm going to buy above there. Not yet. I almost did. Almost got caught. Wow, it was just like a split second. I was just moving my finger over, and now I'm waiting. Okay, so see how it's coming down red. Let's see if it can retest this green box or about 50% of this candle and come right back up. But I'll be looking for buys above here. NASDAQ is gone. You can buy NASDAQ already. NASDAQ is gone. I'm waiting for US 30. I'm trading US 30 over NASDAQ. Right now, I'm buying. Okay, so now I'm in a buy. Also with US 30, you can get in there. I'm looking for a nice little quick pump. Okay, up to the next daily, the yellow line is 90 pips. But for scalpers, maybe we're looking for a move maybe up to here at 920. And then 920 is about, again, 40 pips. Okay, so got rejected, made a new high, got rejected, maybe to pull down. But I'm opening up my stop loss with this. Lower lot size, okay, market open, lower lot size. And then I add after the first 5 minutes. Remember the white line right here, that's that hourly resistance. Okay, so if this 5-minute candle can continue to close above there and build off of this white line, I start to increase a position. First position always, I go small, I go lower size. Did you guys get a gold signal from the Discord? Congratulations if you guys took that. Okay, so now it's the actual retest right here. Okay, so we're actually retesting now the area. This used to be red for the entire morning, and now we're going to see if it holds. This is the bigger moves of Wall Street, okay? So that's why I say they're big candles. I'm in a smaller feeler trade, testing it out, which allows me to hold the trade longer in drawdown because it's a smaller trade. Now when it picks up liquidity and it comes back up here, if I'm going to add my second position, that's going to be my next position that will be a larger size. But it's getting rejected hard right now. So let's see if they can come down, pick up liquidity. If not, if it breaks below here, I got to cut this trade, even though it's a smaller one, because then I could be looking for a potential sell. But let's let it build, okay? It's only the first 3 minutes of market open. Yeah, if you don't feel comfortable trading this, guys, don't trade the first 5, 10, 15 minutes of Wall Street Open. Don't trade it, If this type of volume is not for you, don't trade it. I'm speculating where it's going to go. Yeah, so I took the stop. I got stopped out. So I lost 10 bucks on that. Okay, I went in with a 0.1, lost $10. Now I'm going to watch this area, but I'm going to be now more patient for my next trade. My next trade is not going to be a feeler trade. Okay, my next trade is actually going to be my normal trading size. But now I'm going to completely watch where it's going to move. And then also 9:45, there's also news coming in the market. Gold is coming right back up. Watch gold above 2,000 again. It's playing around with this 2,000 area. Didn't close below here, that 1996 that I was looking for a sell. Okay, so let's see if it comes back up to 2,000, but if it closes below 1996, this could be a sell down here. Okay, so it's grabbing liquidity, coming right back up. That's why if you guys are speculating, I tell you guys trade smaller. Okay, now it's coming right back up. But that's, you don't want to just buy another green candle just coming right back up. They could reject it 50% here and come right back down. So I'm looking now for volume to close above the hourly, the white line. If it's going to trade inside here, that's a no trade zone. So I'll make it consolidated. NASDAQ is still trying to get up there, and I'll look for any sells will be below here. Whatever happens in here, I let it build. Okay, and NASDAQ is right behind. It's a choppy open. That's why you go small. You speculate. Same with gold. Don't go big on gold on a big green candle. Now it's coming down red. Let's see now if it closes like below here. I like the sell on gold. Like if it can close below here, there's a lot of room for gold to cool off. Okay, I'll even scale down to the 1 minutes. Okay, so gold is breaking right now. This candle is going to close in 45 seconds. So these are 1 minute candles now. Here's gold breaking. This is the impulse break on gold. A lot of traders like to take that impulse trade. But if we're waiting to see where this 1 minute candle is going to close, let's watch where it's going to close. It basically came right down to that daily line, that yellow almost, and cut a wick. So let's see where it will close. 20 seconds to go. Okay, so here's the close. Is it going to close below this area? And then we look for the retest to come up to that green box right there, and hopefully it gets rejected. So let's see if it will flip green this 1 minute candle, come right back up. If it doesn't, this thing is going to continue to maybe push down, but we could be looking for an entry on a 1 minute. Okay, see how it's coming up? Let's see if it gets rejected. We can't sell that candle. It's green. Okay, so it's coming right back up. So if you look on the fives, what we're seeing is that wick, that fake out. See what I mean? I like to trade 1 minute candles on Wall Street. I should have gone into the 1 minutes with you guys as well. But it might be too fast. It might be a little bit too fast. So now we see if this 1 minute candle will get rejected here. It's not currently. So you kind of got to hold off on that sell. See, that's why it's representing the candle that came down and right back up. So we'll look for 5 minute volume to come back and close below here. So that's where sometimes, guys, you can flip to 1 minute candles to kind of look for an entry, okay, and maybe save you. Okay, so it was green coming right back up. So that's represented by a wick on a candle. So no sell, no volume close below there, unless you entered on that impulse. But that's too fast. Indices are still playing around in here. Okay, so this 5 minute candle is going to close in the next 90 seconds. So we'll see where the volume closes below. Right now it's pulling right back up. 60 more seconds. Do you guys think gold can get back above 2000? If it grabs this liquidity and it comes back up, maybe it has momentum to close again above 2000, might have a bullish move. But if it closes below this 1996, it might have more momentum to push down and come down just a little bit down here. But it's getting close to that red folder news in 5 more minutes. So we have to be very careful, guys. That's why please trade with smaller sizing if you guys are taking trades. That's all I can recommend, okay? Because we're going to get stopped out of some trades. You and I will get stopped out, okay? Until we get a good feel of the market. I was speculating market open. Yeah, I took a loss, but it was such a small size. I know it's $10 that I lost, but it was. But I'm getting in to speculate to see how the market can move. Then I enter with another lot size, going in if I like the way how it was moving. If you went in with a big size, yeah, you could have got your account ruined. That's why we try to tell you not to do that. Okay, so no volume close below there. We have to hold off on a sell. Fortunately, it's not there. Let me just clean this up, get rid of this. Okay, and US 30 is still inside this area doing nothing. NASDAQ is right back down. So Blair, that big break was that initial impulse move, you know. Nothing created out of it, just a false break.
Yeah, no, they filled the NAS gap pretty quickly.
Yeah, but it was too
still
quick.
held up. It was way too quick. I mean,
Yeah.
this is why I don't trade until like 10 o'clock.
Yeah, but that's why I went in with a smaller size. I got caught, yeah, but I was looking to see if it would break out a little bit, come back down, retrace, retest. Then I would have gone in with my bigger size. But again, it can come right back up. You know, there's no doubt about that. But let's see, because we also have news coming in 4 minutes. So those are those 2 red folder US folders. And gold,
Yeah, no,
gold is pushing down. Let's watch gold to close below 1996 here. This is a typical Friday. Okay, shouldn't be a surprise to anybody here that trades market opens on Fridays. Oil, okay, NASDAQ is coming down. Let's see if it can close below here. Okay, I'm going to start to clean up these boxes now because we have a daily area we're concentrating, but the break of the neckline is where possible. I'm going to look for sell. Okay, so the market is breaking right before the news. You know, they could be doing that where we enter a sell, then all of a sudden it starts to come up green. So I'm not going to be taking a trade now until they drop that news, because unless you guys are trading, but you understand that it can be very, very fast. So this is where I wouldn't trade with crazy lot sizes, guys. Just hear me out. If you're speculating, do something small like I did, penny size. Feel out the market, because otherwise you're trading this like a yo-yo right now. Green, red, green. It's frustrating. You'll probably get mad. You're going to do something silly like revenge trade. This is not the time for that. This is where you go small and you test out the market. Okay, we have 2 more minutes to go into the close. If you blew up an account, I can imagine how you blow up an account. That's what I'm saying. If you're trading big on a market open and you're over leveraging, unfortunately, that's what happens. You will possibly blow an account. What were we saying this entire call? Is to trade small. If you go big and it goes against you, then you're probably gonna blow up an account or lose a lot of money. It's given. I don't know why it's so difficult for everyone to learn this concept. Okay, so be prepared for news coming right now in 1 minute, right here. Okay, right here. See these two right here? This is going to cause a lot of volatility in the market, guys. So please be careful trading. Okay, so even NASDAQ broke all the way down to that hourly white line and coming right back up. So there's a big range. I don't even think the markets know where it's moving right now because it's anticipating this news. So here we go. We're right back into this consolidated box. NASDAQ is right back in here. Some traders will wait the next 15 minutes as well before taking a position till 10 a.m.
Here we go.
Okay, so they popped it red. Okay, it could just come down, pick up a wick, come right back up, or it could just continue to go down. But if you're going to take a trade, make sure you have a good understanding of where it's probably going to go and what lot size you're using. See there, those sellers got caught, and now it's coming right back up. It's probably going to come up, maybe catch a wick, and go right back down. Okay, it's accumulating. It's a big, huge range. So you can imagine how many stop losses it's triggering up and down right now. Both are higher than expected. Isaac, okay, thank you. Let's see what gold is doing. Okay, gold is breaking. Okay, I know I wanted that 1996 sell, but again, it's just an impulse. You know, you have to wait for volume to close below unless you're taking that impulse trade. Okay, so I'm going to flip to the 1 minutes to see what's going on in here. Okay, so this 1 minute candle is going to close in 15 seconds. Let's see if it can close below this range. Yeah, today's not an easy day to trade. It's very, very, very difficult to trade right now. Okay, so don't be trading with lot sizes if you can't handle some drawdown. Okay, so we're looking for volume to close below. Next 1 minute candle opens bullish. So no trade. Okay, see there? If you are, then you got caught on a wick. Now it's coming back down. Let's follow this 1 minute candle. Okay, now it's pushing down. Now I'm going to go into sell on US 30. I'm going in on this 1 minute candle. Okay, so I entered to sell here. Place my stop loss like above. I'll look at the 5 minute zone for stop loss. Okay, above here, I'm going to place my stop above the prior wick. I'm trading on my mobile, 10% profit. I'm not trading on desktop. So I've traded on my phone all my life. But if you don't believe I'm trading, it's no big deal. It doesn't hurt my feelings if you don't believe I'm trading. I come on here just to talk while I'm fasting and not trading. So What is my heaviest deadlift? What does deadlifting have to do with what we're doing right now? Dave is the deadlifter, not me. Okay, guys, so it's pushing down a little bit. Okay, we're going to see if it can come down to this green box. This candle is going to close in 30 seconds, so we'd like to close it below here, maybe get a quick little pullback, and then it pushes down with the next candle. But we're looking for volume to close below this neckline. It's kind of like an M pattern, basically with the neckline here. So we need this volume to continue to close below here. It's very, very choppy. Okay, so we closed, okay, below. This is the retest candle now on the 5 minutes. So what we're looking for is to get rejected right here, or possibly 50% of this candle, and no, we have to get rejected at this daily to continue this bear momentum. Gold. Yeah, gold closed below. So again, gold, you're looking for the retest now to continue to enter into. Yeah, you can sell gold right now. Yeah, you're absolutely right now. Sell gold, place your stop loss like above this structure. And then you're going to look to break this daily and continue to push down on gold.
The bulls are holding 390 on SPY right now. I think it's a range day. If they
Yeah,
hold 390, they could bring it back up to 394, 395.
we'll see what happens. It's a Friday.
Yeah.
Okay, but
Probably that
that's a
quick day.
nice, okay, so it came up, got rejected up here. We're looking for more volume to get closed below here, and then maybe we can continue to push down with this bearish momentum for US 30, but we need more volume to continue to come down and close below here, okay? That's what I'm watching. Gold is struggling to break 1993, this daily area.
Yeah, it's financials, industrial, materials, energy that's causing US 30 to drop right now. But if they bottom out, they may get a bounce.
Big moves, okay? So there's big moves in the markets right now. Had a lot of volume come in. You had Wall Street open and a lot of this red folder news, okay? So you have to trade much smaller. Like, this is not going to be the only Friday or any day where there's Wall Street with news. So you have to trade much smaller for your account.
Oh, they're trying to push NAS here
Yeah,
again.
I got stopped out now, okay? I was in good profit and I didn't take out my profit because I was looking to break this low, and I got stopped out. So that's it for me, guys. That's the trades I'm taking. It's a tough market. I'm not going to trade any longer. I got to get ready to go to the mosque. No, not big moves. I didn't mean that. Big candles. Like these are wide range candles. They're very large candles. So you have to increase your stop loss for these things. Fridays are tough, guys. Fridays are tough days in the markets. You know, there could be moves after 10 a.m., after 11. There's possibly going to be moves, but this market open was very, 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 very difficult, very choppy. Why are Fridays typically like this, Bernard? Because it's just end of the week. There's a lot going on. Options could be expiring today. There's a lot going on. News, and then market makers are usually setting up, grabbing a lot of volume for the next week. You know, Mondays and Fridays are generally the most difficult days to trade. For anyone, even intraday traders, for swing traders, they're very, very, very difficult, especially for scalpers too. Okay, Blair, thanks for joining. Guys, thanks for joining, everybody. I appreciate everyone's time for joining. Gold is, I think, breaking down here. Yeah, so gold is breaking down, pushing. If gold can still stay below 1993, it can push down. So gold is starting to break down now. Maybe now it's going to start to get, yeah, so that's what I was kind of hoping for. I didn't get in. Hopefully you guys got it that were asking about it, but that was a good sell opportunity on gold. Kind of broke, retested, and dropping. Maybe gold's going to come down to 1990, maybe 1988. That's a nice move. Oil is like a double bottom, could continue to move up bullish. The indices right now, you could be looking for buys again. If it closes above this area at 10 a.m., could be looking for buys. They picked up a lot of liquidity down here, picked up that liquidity coming back up. If it can close above here, could be nice moves to the upside. But that's it for me, guys. I can't even talk right now. It's not easy to stream while you're fasting. But thanks, guys. I appreciate everybody. Have a good weekend. Juma Ramadan Mubarak to everybody, and have a safe, happy weekend. And be healthy and enjoy your time with your family. Thank you, guys. I appreciate all of you guys. Have a good weekend.
Recording stopped.
Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.